Welcome to the Small Steps, Big Wins podcast. I'm dedicated to helping you take control of your life. Together, we'll explore practical tips, expert advice, and inspiring stories to help you overcome obstacles and achieve your goals. Making small changes is possible and can lead to big results. Are you ready? Let's go do this. Mike, welcome. I'm so excited because we had a conversation a while ago and I'm like, let's continue the conversation. Good
Yeah,
morning.
yeah. Thank you. Good morning. I'm excited to be on.
Great. So I like to let my guests just start their story where it's natural for them and we'll just jump from there.
Cool. Yeah. Well, we're talking about small steps to big wins, right? So
Uh,
there's a lot of that, I think, because it all starts with a lot of little steps, right? But yeah, my journey starts, I don't know, about 10 years ago or so. I had a unique, slightly less fun situation with a job, where I got sat down and had 30 days to basically find a job in the company because mine was eliminated. And that sent me down a whole unique path of finding alternative investments and alternative, really, lifestyles with financial independence and financial freedom. So that was probably where it all started about 10 years ago. So I didn't really think much of it at the time, but it was obviously a really vulnerable situation, right? So my son was like 3 months old. My wife was still at home on maternity leave with him. We had just purchased a house that was already a little bit above our means, right? So it was, and like most people had, maybe $1,000 in savings, like no investments, like not a ton of cash to fall back on. And we just found out that, my job was potentially being eliminated, which was a huge portion of our income. So it's a super kind of a scary and like unique situation of like, how did this happen? Because it's funny because I was in a company of about 1,050 locations, and I was able to take one of the locations from the bottom half of that company to top 50 in the entire company. So like I was excelling and crushing it. So I always thought you came in and you did well, you'd be taken care of. But somebody somewhere in the company had decided that position didn't make sense for where the company was going anymore, and kind of made the switch and pulled the plug, right? So really, really an awkward situation and not a fun one to be in. So like I said, it kind of sent me down a different path. And looking back in hindsight, it's the kind of a pivotal time for my life, and one that I'm super, super grateful for, because it put me down a path that it put me where I'm at today, right? And had I not gone through that, I call it my matrix moment, where you kind of see other options and you see other opportunities out there, and we call it financial independence. And once you see it, you can't unsee it. And it seems um so common now, so much common sense now, but it wasn't at the time. So that was what was going through my head. It was super awkward. It was super weird. It was super scary, but super grateful for it at this point in time.
I love the picture of the Matrix moment. I think that's so cool. So you talk about these paths that you went down. What were some of the early paths that you pursued?
Well, a little bit of trial and error, but it all started with just being a little bit curious on, and really kind of just wanting to never ever be in that situation again, right? Where somebody could make a decision and change the financial future for you and your family, right? So I didn't ever want to be in that situation again. So it really just started with being curious of like what other opportunities are out there.
Did you
And
pursue? What kind of opportunities?
well, I started with like stock trading and not really like day trading, but I looked into like, and you're familiar with this with your line of work. It's like the Warren Buffett strategy of value
Value
investing.
investing. Yeah.
Yeah, concentrated portfolio and things like
Mhm.
that. But I did a lot of research on that. I tried it, and I made a couple really good calls. Like, right, you'd buy it, you buy a stock in a company, they would beat their earnings estimate, they would raise their guidance, and then their CEO would say something stupid, and it would tank their stock. So I was like, okay, like I made all of the right moves. I bought when I should have. I bought the right company, and yet one person made a dumb comment, and the stock tanked. Right, so I'm like, okay, maybe that's not for me. So then I kept jumping around, and I kind of found the Dave Ramsey path, and
Mhm.
made sense for a little bit. But then, the work and grind until you're 65 to maybe have $1 million to retire on, like, didn't
Yeah,
really
that
appeal
didn't
to me,
appeal
right?
to me either. Yeah, no, I've taught Dave Ramsey for, I don't know, almost a decade. And you mentioned before about when you see things, you can't unsee them.
Yeah,
So as I continued teaching that and then joined Emerge and then got around a different group of people who think differently, you go, okay, Dave Ramsey's got it if you're in debt and you need a
yeah,
plan, and it's really good for giving you a framework to get on the road to financial independence. But I agree with you. The working till 65 just doesn't really seem appealing to maybe hopefully have $1 million in the bank and your house paid off. To me, that's not
Yeah.
living one life fully lived, right?
Yeah.
So I can understand that. What was something that you learned that you would consider one of those things that once you saw it, you can't unsee it?
Well, I think the financial independence, the concept in general, right? Like
Mhm,
having, before I had found the financial independence community, a financial freedom concept, it was kind of like we talked about, right? You save as much
mhm,
as you can, and you can retire probably in the 60s. But when you really just look into the math of it, and when you start reading some of the concepts of financial independence, it doesn't have to be when you're 60. It really just has to be like, what are your expenses? What's your income coming off your investments? And when those things match up, like,
mhm,
call it what you want, call it work optional, call it, early retirement, but you're not forced to work and you've got options, right? So that that concept that people were doing it earlier than when you're gray and old and in your mid 60s was like mind blowing. And then when you look at the math of it, like I was never one to like look at my finances and to do personal, like look at what I was spending, but just being
mhm.
more intentional with where your money's going and what it's doing was a game changer as well.
Yeah, how did that make you feel when you finally figured out your budget and you saw where your money was going? What were some eureka moments you had?
Well, it's super frustrating at first, right? Because
Mhm,
it's probably one of those things. Well, for me, it was one of those things where it was like, well, like you've been spending all this money on certain things that you don't get value out of, right? And I've never been a budgeter. Like I'm naturally just a spender, right? And so it was frustrating to sit down at a spreadsheet and like stare at the same number and figure like, all right,
mhm,
we're spending this, we're making this, like, how do we squeeze a little bit more out of it? That was never fun to me, but it was a fundamental part of moving forward and getting that gap between what you're spending and what you're making. And, then you can find some stuff to do with that, invest it and get moving forward. Right. But it was not fun. And it was stressful to look at a spreadsheet and figure out like,
yeah.
but it was needed. It was necessary to be more intentional about where your money's being spent, where you can make more money, what you can do with the difference. You know what I mean?
Right, right. And I would suspect that over time it became less frustrating and became more familiar. So,
Yes, and
yeah.
there's all sorts of fun tricks with being able to automate certain things, and once you
Mhm,
do, you get a little bit of traction. Dave Ramsey, like we talked about, like isn't great for everybody, but the debt snowball, being able to look at like your debts and see like
mhm,
where your money's going to, and if you just chunk off like a few things, like how much more money you could have to do other things with. So
yeah,
just putting it on paper, I think, was the biggest thing, right? Creating a spreadsheet where your money's going, how much debt you've got. Now we look at it as like a personal financial statement. I look at a personal
mhm.
financial statement and net worth like weekly, every Friday. I kind of account everything and see where everything's at. But you just got to start with having it on paper and knowing where you're at.
Right, right. Hey, I have to ask. I find that when I was counseling people for budget help and everything, one spouse is a saver and the other is a spender. I'm going to go out on a limb. Is your wife more on the saver side?
She's just more naturally frugal. Like she
Yeah,
doesn't
there
she
you
doesn't
go.
I wouldn't say savor because like it's not like intentionally like
Yeah,
we're
but
trying to save
frugal.
something, but
Yeah,
like
yeah,
frugal
yeah.
for sure.
Yeah,
Yep,
yeah,
yeah.
yeah. You're going to buy $1,000 item and she's looking at you like, "Are you sure we need that?"
Yeah. Yeah,
Okay.
absolutely. Yep.
Yeah, yeah, yeah. I figured that. One thing you said in there that I wanted to pull out is as you started out on your journey, you realized that you didn't want to work till you're 65. And then you had the word in there investments. Where did your path eventually lead you? And I don't want to say land because everybody's journey evolves over time. So, as you're going down this path, where did you eventually fall in the investment category where you realize I can do this and I can build something that's going to allow me to attain financial freedom? Talk a little bit about your journey there.
Yeah, so like most people, I landed in real estate. I don't know how I stumbled across it, but the Bigger Pockets forum, the Bigger Pockets podcast, and actually, I can tell you how I stumbled across it because it was we rent a cabin every year for a family reunion, and this was probably 8 or 9 years ago. So maybe in a year or two after this had happened, and the wheels were still spinning and going down certain paths of exploration of like what would be the best bet, right? But we were sitting in this cabin and we paid probably $5,500 for a week at this cabin for I don't know, 20 plus people of my extended family to stay there. And you start doing the math on how much that cabin costs and what the mortgage is, and like it just started, like the wheels started turning. And although I never went down like the short-term rental, cabin rental, because I vetted it out and I didn't think that was the best bet for me, it did send me down real estate investing and learning a little bit more about that, and for a handful of reasons. The most simple one is because real estate is really simple at its core. It's debt, income, and expenses. And if you figure those out, you can figure out real
Mhm.
estate, right? So you don't have to be a rocket scientist, and you can also have a little bit more control over it. So I landed in real estate. I started with small multifamily. I learned about commercial multifamily, 5 units and up, and learned how they're valued and how you can add value. And I figured that was a little bit more in line with my skill set with operations and being able to look at a business and pull expenses out and grow the top line and things along those lines. So I landed with multifamily. I started with a duplex locally in the Twin Cities here. Ended up buying and selling that pretty quickly because I wanted to go to commercial. So we bought a 24 unit with a couple partners. We joint ventured that. We bought an 8 unit with that same group. We bought a 28 unit and a 77 unit after that. So we've got 129 units in the portfolio because we sold off our 8 unit. And yeah, so commercial multifamily is where I landed and love it.
Wow. Okay. So talk a little bit about you went from a duplex and now you've partnered with people. Talk about your experience partnering with people and how that has allowed you to scale more quickly versus just holding like a couple of duplexes and trying to DIY it yourself.
Yeah. So putting yourself around people who are doing what you want to do and doing bigger things is eye opening, and it kind of expands the mind on what's possible. Right. So I joined a group called Jake and Gino, Wheelbarrow Profits. So I jumped in with that group. They're big apartment investors, and they've got an education arm that teaches people how to do this. And once I figured out multifamily, 5 units and up was what I wanted to do, I tried finding a group of people who were doing it, right? So
Mhm.
the partners from that deal, that first 24 unit, were in that group, were students in that group. And one of the guys in there, Aaron, had already done a 30 unit, and super smart dude, and was able to, we brought him on as a partner, and he was able to really guide us through that first acquisition, which was huge. We
Mhm.
probably wouldn't have closed it without him. So, but having somebody there who's done it, who can help kind of with the process and help you learn, is just huge. Because like if you don't know, like you can spend your time around bigger pockets and Google and things like that, but you're really just trying to decipher what, all through all of that information, like who's done it, who hasn't, and like what's real and what's applicable to this scenario. And it's way easier if you can partner with people who've actually done it, or get a coach who's actually done it, and you can get one-on-one time asking like this specific situation and how to handle these things. So huge game changer.
Yeah. So talk about limiting beliefs. So in those early days, what kind of limiting beliefs did you have to combat in order to go from what we would say 0 to 1?
I think there's probably two factors to that. Limiting belief number one is that it's going to be a very linear situation, right? So when I first started looking at real estate investing for like this duplex that I was getting, it was, the goal was financial freedom, right? And if you're looking at these deals, like this first deal, looking at the cash flow that would produce, and trying to like extrapolate that over
Mhm.
many years, and then trying to think of, okay, like it's starting out buying a $320,000 duplex. I think at the time I think I had to put like 80K down. Like that was a boatload of money at the time. It took a lot to save that up. We pulled a little bit out of it, HELOC from a primary residence, and we're making a couple $100 a month. So I'm like, if I do that every couple of years, like it's going to take 20 years to do this,
Yeah,
right?
you'll be 65 by the time you retire.
Right. Yeah.
Yeah.
But like
Yeah.
what I didn't realize is like it's more exponential, because like you get that first deal and then you learn a little bit, right? And then the second deal is that much better, and then you learn a lot. So then the third deal, like it grows a lot faster. It's not like looking at a spreadsheet and extrapolating it out over years, because you
Mhm.
can't factor in the growth, the things you learn from those first couple of deals, and how it's going to make the next deals that much better. So that was that was a big thing for sure. And then rethinking about risk and how people look at risk. It's
Would
just,
you consider yourself risk averse?
no, not really, but like how people look at risk from a W-2 perspective and from real estate investing, like it's kind of ass backwards, like how we're trained about risk in our world.
What do
And
you mean?
what I mean by that is, when I was people think the less risky thing is to go to school, get a good job, and put 8 to 10% of that in a 401k, right? That is the most risky thing I think anybody can do. Like you're putting all of your eggs in one basket, aka that employer or that one person who can make a decision, and you're not there. And of course, you can go find another job, sure, but that seems risky. And I remember when I was going into real estate, had a lot of people talk about how risky it was. Like, you're gonna go be a
All
landlord and buy real estate,
Yeah, all the people not doing real estate are telling you how risky it is, yes.
right? But if you think about it logically, that's the least risky thing you can do. If you can find multiple streams of income instead of one stream of income, like, how is that? You're diversifying the streams of income you got. I think it
Mm,
was Scott Trench that had the table analogy, like, in one of his books, where, like, if you're building your income on a one-legged table, aka your job, and somebody kicks that leg out, your table's falling over. If you've
mm.
got 15 legs on your table, 15 different streams of income, and you lose one, who cares? You've got a rock solid table still. So it just, like, the fact that we think the second scenario is more risky than the first is mind boggling, right? It's just, how does that make sense?
Right. And so you've been able to reach financial independence with the portfolio that you've bought, correct? And
Yeah,
that
yep. I left my W-2 in 2021.
Oh, wow. I
Mhm.
bet that was an amazing moment to do that. Was it scary?
It was, but mostly just because, like, that's all I had done, like, for 18 or 19
Mm,
years. Like, it was that W-2, right? But again, like I looked at, like, the income that was coming off in the investments, like how much we were spending, and fortunate,
yeah.
like, my wife is still working and she loves what she does. So, like,
Oh,
and
yeah,
her job was
nice.
still secure, right? So, like, there's
Right,
that. But then, doing it in a way that was a little bit more safe, right? So, like, okay,
right.
saving up a good chunk of change, and I was going to go into real estate full time doing other things. So, like, I've got a huge runway to where if I didn't make anything in that next venture, where we would just be just fine. So, yeah, calculating
Yeah.
it out where you can kind of de-risk it a little bit.
Yeah. When you quit your job, what did you do in those first couple weeks? Did you do anything special? I hear people do certain things or do nothing. What did you do?
Well, I quit my job and I got my real estate license. And the goal, the intention with the real estate license was originally just to do it to fill time, right? And to kind of bridge the gap between I found what I wanted to do in next after I left the W-2, right? So
Mhm.
that kept me a little bit occupied. But yeah, it was definitely weird moving from the corporate world, which is so, so, so structured, to working for yourself and not having that structure. So I showed up in my office still, like, every day, like I would if I went to work, and just went to work on my own thing.
Okay. What was the one thing you thought that would be hard about real estate and turned out it wasn't? And what was one thing that you thought would be easy but wound up being really hard?
Well, yeah, the what I thought would be easier in wound up being really hard, and maybe not hard, but maybe harder than I had thought it was. So, managing in asset managing and managing properties, there's more of it's definitely more of a nuance and multifaceted thing to do to manage these properties. I don't manage, like, we've got a property manager, but I asset manage these properties, where we give them direction, and we give them, we review KPIs and review
Mhm.
our reports every few days, and weekly and quarterly basis, and give our property managers direction on where we want to go with the properties. That was definitely more than I had thought, right? Like, you think about real estate, you think, like, set it and forget it, which nobody should ever do, right? You should always be maintaining your assets and keeping an eye on them. But there's a lot more into that than I had anticipated. So that was
Mm,
probably one thing. What I thought was going to be harder, that wasn't, and probably the contracts and, like, the legal side of real estate. Like, I always thought,
mm,
like, there's going to be a huge concern about somebody tripping and falling and getting sued, or, like, having to review all these, like, legal contracts. And once you review a handful of those, it's really not that hard. And of course, you have professionals that can come in and help you out with that. So yeah, I thought that was going to be a lot more of more difficult than it was, and it wasn't.
Oh, that's cool. So, as if you could go back in time to your younger self and tell yourself a message, what would it be and why? If you don't like that question, the other one is what would your 80-year-old self tell your today self?
All right, yeah.
Or both.
Well, I mean, I got to go with the first one because it's just so obvious, and it is,
Okay.
it's this notion of financial independence. Like, and this is why I did a podcast for a year and a half, and it was all about real estate investing in financial independence, because I want more people to know about this, right? Like, there's more than just the traditional path of finding a job and doing your thing for 30 or 40 years. And I think it's so important because it gives people flexibility and options to explore what they truly want to do, right? So if you have some of your basic needs covered, like if you can get like a small teeny portfolio or a small amount of passive income coming in that will cover things like your rent or your mortgage or your basic living needs, then you've got the mental capacity and the space to go think about what you actually want to do and solve problems in the world that you might have more passion for. So like it just this concept of having passive income and financial independence that give you flexibility to do what you want. And it's not like you're going to go sit on a beach and not work, but like you've got the options to work on what you want and what really drives you. And I think if more people had that, we would have a much better world where people can focus on what they want to do, solve problems that they want to solve without the nagging in the back of their mind that they need to put food on the table and pay the rent that month. You know what I mean?
Yeah. So out of your podcast, and we had talked before, you had 120 episodes. That's a lot of people to talk to. What did you find, or what do you think are some of the biggest obstacles that people tell themselves or encounter that keep them from exploring financial independence and making that leap to leave their W 2 and then go pursue the things that they want to do?
Yeah, I think the biggest thing after all of that is people think it's harder to accomplish than it is. And it's not easy, right? But if it was,
Right.
everybody would do it. But it's super daunting when you're looking at a spreadsheet or looking at your like what it would cost, like what it would take for you to get to financial independence. You know, if you're spending a certain amount, you've got to get that amount in passive income. If you're starting from zero, like it can be super, super, super intimidating looking at that and trying to figure out, well, how am I supposed to do that?
Mhm.
Like I said with the investing is it's not linear, and it doesn't have to be linear. And in a lot of people's cases, they can ramp up their financial their passive income and ramp down their W-2. So, like I had an option of going 4 days a week at, my corporate world instead of
Mm.
five if I wanted to, or three. A lot of people who work in, healthcare, hourly jobs, maybe they can go to a, 3 or 4 day a week once they got the passive income. So like, it's not like this, you reach this point and you just like hit a cliff and you quit. Right. So it's just starting, just getting the ball rolling. And it does happen a lot faster than you think. But when you're starting from zero and looking at a big number, it can be super intimidating.
Yeah. You talked a couple of times about the movement not being linear. How did that play out for you? What did it look like?
It was more like the learning curve. So like, I
Oh,
bought the
okay.
duplex and it was a duplex, right? So there's not a whole lot you could do on that. And then once I bought that and I got that, what you'd call stabilized. So you got tenants in there and, the money's coming in and, all your major items are repaired. Then I started doing a little bit more research and finding commercial multifamily was maybe where I wanted to go. So I sold that and jumped that into the 24 unit with a couple of other folks from that group. And during that, I learned a boatload about, how to manage a property like that size, how to find a property that size, like what you look for in a property like that. And we were able to rinse and repeat that for an 8 unit. And then we learned about, the syndication model, and we had other people looking at saying like, well, how are you doing that? How do I get involved? And that was an easy transition into raising funds and bringing other silent investors onto the 28 unit. You can map it out and say, it's going to exponentially grow at this. It's more about you're going to pick up certain things that are going to change your next deals in the future, which are then going to make you more money. So I need this amount of money in, 5 to 10 years to get financial independence, because there's so
Mm.
many unknowns that come in when you actually start taking action and doing the things that you need to do that you can't factor in. And they're all
Mhm.
good, right? Like as long as you're being intentional about what you're doing, what you're learning, and kind of taking that forward into the next opportunity, then you're going to grow at an exponential rate instead of linear.
Mhm. Did you think you were going to achieve financial independence at the time you did, or did it just kind of happen by, okay, you built these portfolios and realized, oh, wait a minute, I actually have this.
Yeah, the goal was always financial independence, and the
Right.
goal was, I think when I was starting out, I'm trying to think of like how old I was, but it's like 28 or 29, and the goal was to kind of be work optional by 40. So it wasn't like a super aggressive one, and it happened like when I was turning 35. So it
Earlier than you
like
thought.
yeah, and life changes too. So like your expenses, as you start making money, your expenses sometimes creep up. So you got to be super careful about that. But yeah, that was always the goal. And like I was always very in tune with like watching it and where I was with that and tracking my progress towards it. Partially because I had a corporate W-2 gig that I wasn't a huge fan of. So like I was kind of keeping an eye on where I was at in that race. So
Yeah, yeah. So, what's your approach to facing challenges? What happens when things go sideways for you?
for how do I handle it personally?
Yeah, yeah.
I'm definitely a processor, so I don't make snap decisions, which is, I don't know, that's why I'll never, politics is never ever going to be my future because, like, I'm not good on the spot, right? So, like, I have to process things and I have to sit on them for a second or two, right? So, I will always do that for one and not make a snap decision because anytime I've done that, it's always been a bad decision. Some people are great at that, and maybe it's intuition and that's great. I'm not. So I'll sit with it for a second, but then I always line it back with a vision, right? So like, where am I trying to go in 3 years? And what decision will align with that best, and then trying to break it down, right? So if it's a larger, what seems to be a large issue, large hurdle, large whatever, is just like trying to break it down into the smaller components of like what actually needs to happen. So kind of like what you call it an issue, but it's kind of the same way you tackle goals, right? You got a larger goal. Well, how do you do it? You reverse engineer on what you need to do for that year, what you need to do that quarter, what you need to do that month, what you need that week, and the daily actions that you need to do to achieve it, right?
Right,
You can do the
right.
same thing with like a large problem that arises in your business, is to really truly make sure that you're aware of what the problem statement is and then chunk it down into smaller steps that you need to do to be able to overcome it.
Small steps, big wins.
Yeah, for sure. Like, yes,
Yeah.
super fantastic name because it's so damn accurate.
So, yeah, let's see. As we're coming down to the end, so can you share a book that has had a significant impact on you?
Yeah, there's a lot of them. So I like The Honeybee by Jake and Gino, Jake Stenziano and Gino Barbaro. For anybody who is thinking about passive income, financial independence, financial freedom, it's a parable, and it's such an easy read, but it's the way it's laid out is super powerful around like the importance of it, right? So The Honeybee's great. A lot of the ones that are talked about in our circle, like The Vivid Vision is
Mhm.
a fantastic read. I love that book. Man, there's probably a lot more. The Daily, I like Ryan Holiday. If you ever heard of him, he writes The Daily Stoic, Discipline is Destiny, Ego is the Enemy. A lot of those, he's fantastic. So I like a lot of his
Mm,
reads.
okay. And what's one question or topic you wish I would have asked about, and how would you have answered the question or expanded the topic?
One topic I wish you would have asked about.
Yeah.
Man, I don't know. I think we covered a lot. So I'm super
Hey, so,
passionate about
go
like
ahead.
the financial independence, financial freedom. We talked so much
Right.
about that, and I think it's just so important. I wish we would have
Do you
talked.
have a do you oh, I was gonna say, do you have a passion project on board for maybe, like, the future that focuses around financial independence? Because you do keep coming back to it, so I know that's kinda like a thread for you.
I do, and I've never been like a big, I don't know, guru or educator. Like that's not the right word, but like I haven't really kind of pursued that path. But like I almost feel like drawn to, because if I had not learned about this, I would be in the corporate world, like trying to grind it out in those 60, 70, 80 hours weeks with probably no savings, and just, living the
Mhm.
standard American life, which is kind of shitty in my opinion. But had I not found that, like, that's where I would be. So I like bringing that to more people's attention, and bringing people to that is a huge passion of mine. So I did the podcast for a little bit. We split ways based on, we stopped doing that based on some difference in opinions with monetizing it and whatnot. But yeah, I'm starting this actually Thursday, which is funny because I didn't tell you about this. We're launching the Wealth Builders Circle, which is going to be a more of a localized accountability group for people who want to reach financial independence. So
Oh, cool.
I'm excited about that. And it's going to get me back talking to people who maybe haven't heard about this concept, and helping people
Mhm.
get there and start putting the small steps towards that, if you will.
Yeah. Is that local in person to where you
Yeah.
are?
Yeah, it's
Oh,
local here
cool.
in the Minneapolis area, and we got a handful of people registered for the first event, which kicks off on this Thursday, the 21st. So
Oh,
I'm
that's
pumped about
exciting.
that, and
Oh,
I'm
good for you.
hoping. Yeah,
Congrats.
thank you, and it's just, yeah, like I said, it's the Matrix moment was so dang powerful for me, and I just can't imagine where I'd be if I had not gone through that. That I just want more people to know about what's out there and the
Mhm.
options out there.
Oh, awesome. You have a great story. So, as
Thank
we
you.
close, what's one small step that someone can do today that'll help them change their tomorrow that you want to leave us with?
I think the small step that I would say is just the daily tracking, right? So like, I don't think a lot of people do this, and I didn't until, I started going down this path, is take 5 minutes in the beginning of the day and write down some intentions of what you want to do and what you want to accomplish. And then 5 minutes at the end of the day and figure out what got done, what did or didn't, and how come. So I think a lot of people will set the New Year's resolutions. Some people will set quarterly goals and things like that. But I think where people lose it is a lot of time passes really quickly if you're not being super intentional about what you're trying to do and getting it down to the day to day. What am I doing today? At the end of the day, did I accomplish that? That was a big game changer for me. So you can grab a just a notepad and a pen, and like every day flip a page and make the notes of things that you're going to do. And, at the end of the day, it take 5 minutes. It's only 10 minutes out of your day. So I would say that was game changing. It's really small that you can make a lot of momentum on.
Yeah, that's a great idea. A lot of people use planners and journals and things like that. I know I use one of those calendars that break it down hourly, and that helps too. So method doesn't really matter. Like you said, it's the intention and actually doing the action that produces the results.
And it's just, you start making progress when you start looking at the granular level like that, and a lot quicker than you would think.
Yeah, I would agree. I would agree. Same is true. Like I started my podcast in January of this year, and we're in 2023. If somebody's listening to this in another year, and I go back and I look at all the things that I wrote down, kind of like journaled all the steps that I took, and I go back and look at it and go, oh my God, I can't believe I did all that.
Yeah. Yeah.
Now it's a lot easier, but you're right. Just writing that down, making those intentions. Mike, this has been awesome. How can people reach out to you?
Yeah. So Instagram's Mike Moe, REI, superiorcapitalgp.com is my website. Mike at superiorcapitalgp.com is my email. So anybody can reach me at any one of those areas, and happy to chat.
All right. Perfect. Thank you. Thank you so much for the gift of your time. I appreciate it.
Yeah, thank you. It was fun.
Thank you for listening to another episode of the Small Steps, Big Wins podcast. I value your time with me, and I seek to make every moment count. In order to make lasting change in your life, listening is usually not enough. So I want to ask you, what practical steps are you going to put into action today as a result of listening to this podcast? Remember, any step, any action, no matter how small, starts your journey to a big win. And if you're not sure where to get started, reach out to me and let's have a conversation. Until next time, love yourself, then love others. Peace.